Everyone, this is a NASDAQ and S&P futures review for the price action of the September 15th through the 26th, which is basically the past 2 weeks, basically since today. So, 2 weeks ago, today. And yeah, we're just gonna kind of get into the reasoning and what happened. The question I'm trying to answer to a certain extent, and yeah, so let's just get straight into it. So, off rip, the reason I created this presentation and the whole idea of basically making this video is to understand why my performance has been not necessarily mediocre, but underperforming the 15th, 16th, 17th, 18th, 19th, 22nd, all the way last week. Last week I didn't take any winning trades. I lost on Monday, and then the previous week before that, I took 2 losing trades and then 1 break even. And why? Why is it that I'm not able after taking a payout? This is what's pretty important to notice. On the 14th or 13th or last week, I did take a payout, and I had momentum going. I was excited. And then all of a sudden it came back to a screeching halt, and kind of sobered us up to, the reality of, trading. And yeah, so why? That's what we're going to figure out. And I want to go over the 17th. So the 17th was FOMC day. Very, looking forward to type of day. The market was excited for it. Rates were finally lowered, and the market was hoping for that. And that's kind of the reasoning behind all of the next slide I'm about to go over. But yeah, so the 17th happened, and I was up about $600 or $500 on each XFA, so about over 1K total, and I did not take profit due to greed and basically just overachieving. I did not take my profit, and what was the result of this? It was either the 18th, 19th, 22nd, and the rest of the time, or it was just the market throwing us off, and then kind of us going down a spiral of what's going on in the market. I can't really identify my higher time frame. My narrative is kind of lost. So it's gonna be hard for me to read the market on a daily type of level. But yeah, I just want to say the 17th is where my psychological emotions were kind of shifted, and I was shown a different perspective and a new emotion that I wasn't shown before, which was greed. So yeah, now we learned that emotion, pocketed it, and going to hopefully definitely suppress it. So let's just get straight into it. So on the left side over here, we have NASDAQ, and on the right side we have the E-mini S&P. So basically, I'm gonna start this entire, ever starting from the sell side take, is this up move, and basically, it sets up the narrative, or essentially the bias, going into these recent 2 weeks, this entire old price action. So I'm just gonna go over the daily time frame. This is where we just closed on the 26th, right here, and then this is where our Monday started 2 weeks ago. So Monday right here, and then I believe 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So yeah, this is our Monday right here. So both of these expansion days are our Monday. Anyways, let's go over this larger time frame. So on NASDAQ, we have, if you look to the left, we have this bullish order block. We have a basically a return into it right here. We eventually get our break of structure, and we come down. We take out the sell side in this daily order block. So now I would expect price, to gravitate towards these highs, and yeah, we do exactly that. We break above higher, and since this up close candle, there's a down close candle below this low right here, and there's this up close candle here. So look, we have high, low, lower low. We didn't make a higher high, low, not a higher high, lower low, below this low. So that is our break of structure, and this now is our order block. So now I'm expecting price, we sweep sell side bullish, we break above this breaker right here, we return into it with this down close candle right into the high of our breaker block, And then we start to rally higher right here, and then we open up. Oh no, that's Friday of still that previous week, and then we get a propulsion. This down close candle taps into this order block after sweeping sell side liquidity, so it's like a perfect, basically, we're going, up, down, sweep, break above, return back into our breaker, and then now I'm expecting this to be a propulsion block. So this is our Friday. We open up here on Monday. We get this push up candle after we just broke out of that consolidation, holding back to this order block. Finally broke out of it. Price is gonna be bullish on a Monday. Then we get a Tuesday indecision candle, because remember, we're looking for price to return back into this propulsion block. We only saw this close out of it. We want to see it return back into there. So then we put in this indecision daily kind of doji candle, and then we finally get this big old wick for FOMC down into this propulsion block. And then if you look over here, I should have done them side by side from the first place. But this is ES or S&P 500. We have a SMT right here, so this low is not taken by ES, and it is on NASDAQ. This is still our breaker, same concept. Put in our SMT, and break above this breaker. We tap back into it right here on this. I don't actually know what day that is, but we do tap into it, and then you can see we get our expansion as soon as we tap into there. And then same kind of thing, Monday rallies, our indecision day. FOMC comes into our fair value gap right here, and if you notice, there's another fair value gap right here. What is that? A double fair value gap to the upside. So we have that model also on there. And then we basically continue higher after FOMC takes out our sell side, both once on NASDAQ tapping into the propulsion block, and then on ES tapping into our double fair value gap, and then rallying higher. So that's kind of our narrative on the daily. And then also, once we get this push up, we get this daily premium candle wick that basically acts as a fair value gap in this situation. So we have a wick right here and a wick right here. You can see how price reacts off of it for this past week, and that's why I do believe price was a little bit more challenging to read, essentially, when it came to more specifically last week. Okay. So let's just get straight into the 15th. So the 15th is Monday, which is this expansion candle to the upside right here. I'm going to get into logic behind that. So remember, going into the 15th, we know that we have, I'm going to be jumping a lot back to this daily time frame. We know that we have this propulsion block that we still need to retest before going higher. Yes, this is hindsight, but it all makes sense, part of the daily profile, or the weekly expansion, profile, whatever. So we could expect a rally, or we could expect something lower into this propulsion. However, since it's a Monday, usually what do we like to do on a Monday? Manipulate. Monday we're creating a range, and then we're looking for Tuesday to be a little continuation. Wednesday, Thursday is our reversals, and then Fridays would be finishing off whatever we need to finish off. But yeah, I'm perfectly okay with this Monday being bullish, and we get even more confirmation going into this 15-minute time frame. So Monday the 15th, this is the 15-minute time frame. We have these overnight lows. Remember, we closed up here, so we're right around here. We open, we have relative equal lows that get taken out around overnight London session, and this puts in a larger time frame SMT. So we could expect these lows to be protected. There's no reason for us to come down here. All sell sides taken. This line right here is that propulsion block I was showing you guys. This right here is that daily fair value gap that I was showing you guys as well. And yeah, so we have this SMT, so that sets our narrative, and right around our open is right here. Our narrative going to the highs. This is our fib levels, and we're hitting all-time highs. So yeah, we have our sell side take, we have structure, we got above this order block, came back down into it, broke above, so we open up at 930 right here. Same thing on ES, we have that SMT with NASDAQ. Fib level's nice, come into this order block on the 15-minute. 930 opens up right around here, And if you notice, we have a 15-minute fair value gap on both NASDAQ and ES on Monday open. So now I'm going to go to a solar chart. And this is the 1 minute chart on the 15th. So this was our 15-minute fair value gap. Remember, price took major sell side and dumped overnight. You know, we had a big old dump, that large time from SMT, and then price started to basically, you know, not even high resistance, I guess you could say high resistance run. These are 15-minute candles. But yeah, slowly started to push up. Right off 9:15, we get this little sweep in this 15-minute fair value gap. We break higher. We get a double fair value gap right off open, and then it takes us into our -1 and negative 0.5 of our fib. So, well, it's on top of our 0.5, so, you know, this would be our target. So we'd long basically right here on this candle rejection of this first fair value gap, stop loss below its low, and then target our 1 extension level, or our 1.5 or 2 or -2 in this situation. But yeah, so, you know, what is the kind of not the narrative, but the explanation? You know, we're coming off of a very bullish week. We just broke out of that expansion. Market's going to be excited to buy. You know, I'm expecting manipulation to this propulsion block throughout the middle of the week, and then expansion as a result of it later. So Monday is a perfectly perfectly fine day to have an expansion like this, and a matter of fact, it was very nice. So yeah, that was the 15th, and now I'm gonna get into the 16th. So now that we have this expansion candle on the upside, and we have this propulsion down here, the market is going to be searching for some sort of reversal, or, you know, in this situation, what we're gonna get is an indecision type of day. But we could have had a day like this that came down into this propulsion block without having any of this, or we could have rallied higher and then came down lower, you know. But today was a very 15th, a very big indecision day. 16th, sorry. This is our 15-minute time frame. We have basically, this is all-time highs activity. So if you look, don't know, 12. I wish I had because this is that's the 1 minute on this time frame as well. This was a little bit of a harder day. Remember, so since we are very, I would say in a premium, definition wise, all-time highs, rallied, and we have to come back down into a discount array in order to go higher. I would like to identify us as in a premium. We get this rally up around, London session. We break lower. We have another breaker structure right here. And we break structure right here with this up close candle. Right there, we get our down close. So right here we break structure. We do not decide to tap into this order block. This still kind of surprised me too, while I was making this, and, currently. It still surprised me how we didn't want to come up into this order block. But once again, that shows a certain weakness, that NASDAQ is not able, to really get up there, and especially because we're such in a premium, so I shouldn't be trying to even sell. And on a lower time frame, we have, we still have this resting low, overnight, slow grind higher. This is obvious sell. We get this buy side sweep, and then we get another protected high right next to it. That is around 9:30. 9:30 dumps. This is an order block. We return into it, and then we get an expansion lower for rally gap, and then finally it just goes lower. This day, I'm perfectly okay with not taking a trade like I did. The market was essentially in a place where, it's going to be nasty. Price action is not going to be good for a reason, because we're up here and we need to be down here, and we're waiting for Wednesday, which is FOMC. So, perfect. This is almost like a no trade type of day. There's no reason to be, mad about a day like this or nothing. This is a perfectly fine day. There's no setup in here. Just one of those days in the market that, has that disturbance, needs that time dilation in order to, play out. So now we'll go into 17th, and this is the FOMC day. So yeah, this is a big day. We come into the overnight hours, and we leave relative equal highs. We push down off, I believe, pretty early London session. And then we get this rally higher. We sweep out this buy side liquidity in this order block, and remember where we are in the daily time frame. We're still up here, and we're identifying FOMC, large range, buy side, sell side taken, seeing some sort of manipulation down to this propulsion block, and in this situation, down into this double fair value gap. So then, now I'm gonna go back to here. We close below. We get this immediate rebalance back into this 15-minute order block. And then we obviously push lower. FOMC comes in, takes that propulsion block, comes into it right here. And then what do we see? A rally right up as a result of it. But now I kind of want to get on a smaller time frame to show you the 3-minute, which is a very, very, very good time frame for this day. I've noticed that certain time frames of certain days play out better than the other. So like, say for example, let's just take this for example. On the 2-minute, 1-minute, 5-minute, I couldn't find any entries. But then on the 3-minute, clarity is provided. I'm able to see us come into this order block, respect, and then get a double fair value gap coming out of that. But yeah, just very nice. Like one time frame will work, and then kind of looking after the 3-minute also presents a setup later for FOMC. Regardless, sweep, return back in this order block, get our 2 fair value gap. This would have been a beautiful short down to the downside of our daily propulsion block. However, we just did not have that knowledge. We were waiting for, maybe we did have that knowledge, but we were waiting for FOMC that we knew was going to be very heavy going into the PM session. So yeah, then, we could have took that short down to, some sort of level, took partials, and then, see what FOMC wants to do going into, the PM session, or the PM session wants to do before going to FOMC. So we come down, we take this wick, this wick, come into that larger time frame propulsion block, break structure right above this high with this candle. So now this becomes my entire order block. Price comes up, double fair value gap, returns into the high of this candle, which is an order block I like to identify, and then we take our buy side. Right here, this is where I longed on the 5-second time frame or 15-second time frame. It rallied up here, price came back down, stopped me out, and then ran higher. So yes, I would have had a good trade. Yes, it would have been perfect, but my greed, as a result, it got the best of me. Am I disappointed? Yes, but that's in the past, and that's how it is. But yeah, I do remember taking that long there. But yeah, very, very algorithmic day. And going back to this daily time frame, we can see how this plays out. Indecision day, big old liquidity sweep into this propulsion block, trapping sellers, FOMC buyers, all of that. And then right here at ES also coming to that daily fair value gap. These are all perfect symbols, not symbols, but reactions of what we want to see happen. So yeah, FOMC does that, and then we go into the 18th, which is a Thursday. Remember, so what is already off the list? Our propulsion block is now tapped into, our ES double fair value gap is now tapped into. What can I expect? I can expect expansion to the upside. I'm no longer trying to short for the week because of our short target is hit. So then this leads us into Thursday. So this right here is a 15-minute order block, right as soon as you break structure right here. And then basically price is very, very premium going into, the AM session. We come down 9:30, sweep out this low, and then basically get a rejection and go higher. Aligns with our high time frame perfectly. We left these lows up here. Left these highs up here. They look a little, nice in order to sell. However, knowing that larger time frame of knowing, what we did here, going to this larger time frame propulsion block, and then getting this crazy reaction out of it back to the highs, we are bullish as heck. So now I'm gonna go down to the 1 minute, and I want to show you. I remember taking a loss on this day. I remember it explicitly. I took a short. So yeah, this up here, because I'll explain everything in a second. Especially with that short. So we take out buy side. Well, our buy side is right here. We go lower into this. Oh crap. We go lower into this. What's it called? 15-minute order block. And keep in mind, I'm still bearish in here. This is how important narrative and bias is to your setup, because my setup presented itself right here in the short, but then it also presented itself right here in this 1 minute candle to the long side. And as soon as I got stopped, that's basically when it presented itself long, and I was unwilling to take another trade on the day. But that's how it goes. But yeah, we came into this larger time frame, 15-minute order block. Right here, we get this close above this high. This now turns into an order block. We come back down into it, tapping the order block, breaker block, larger time frame, 15-minute order block, and then we get a double for rally gap right here on NASDAQ, and then we can go up into the highs. So it was a perfect day, and the only thing that I messed up on that day was that narrative of being short buys on the day. I thought that was our buy side sweep, and then we would go down. But back to this daily time frame, there's no reason for us to be wanting to be shorting today, because the fact that we had that expansion down in that propulsion block, down into this fair value gap. The only thing we should be looking for is expansion. And yeah, so let me go to the next one. So yeah, that was the 18th. Very clean day, just wrong buys. The 19th. What are we going to do? Are we going to fight this idea of all-time highs? Are we going to fight and try to short the market on a week that we know we're expanding on? No, we're not. We're going to be bullish bias going into Friday. So yeah, this kind of will set the tone going into the session. This is the 1 hour time frame, not the 15-minute like I would have done, because of the fact that right here we have two down close candles. This right here is our order block. We break structure right here with this down close underneath this low. We return into it, go lower, take out sell side in this wick. Also potentially this 15-minute for value gap, I believe. And then we basically put down these down candles, expand above this high right here. So now that is my breaker structure. Right as soon as you get above, these down closes become my order block. What can I expect? Relative equal highs, leaving this intact, leaving this order block ready to get tapped into, and this low I'm ready to take some longs. So this is where price becomes a little complicated. This is the 1 hour time frame, and if you're bullish on the day, yes, you're right. Yes, you have a good idea, but remember, we're on Friday where people are expecting us to go higher. We need some sort of manipulation before retail wins, basically. So we open up 9:30, we consolidate, break above, put in a short-term high. I believe we take some measure of buy side, tiny bit, and then we get this slow grind lower. Even though you're bullish, you're not. There's nothing too long in here. There's no sell side take. There's no nothing. Even in here, this is all internal. I'm not going to be longing this internal sell side when I know that price needs to return back to this 1 hour order block and take out some liquidity below this low. And a matter of fact, why is it this low and not this low that I'm looking at? It's because we got our close above with this candle. We closed above just barely, and then this candle taps back into it and expands. And so this low has all that liquidity in that candle. And then we come down into there. As soon as we do it, you can see respect this wick, rejection wick, get this breaker structure to the upside, return back into it. That's our propulsion block. We close above, tap in our propulsion, we get a double for value gap, and then that would take us right into the highs of the relative equal highs. So, and maybe yes, it is a little late, but it's beautiful in the fact that it shows how time dilation and manipulation plays a fact. If we were exceedingly bullish, we would have just used this breaker, and you could have got stopped today on that day. Use that breaker right here in this rejection to go higher. But knowing, we want the maximum of the liquidity, essentially. We're going to come into this order block, take that low, and then go higher. This wood is going to be a harder day. Hindsight, yes, hindsight's easier to read. But looking at that 1 hour time frame, way back when, right around 11 o'clock at close, will get you, a pretty good idea of what's going to be going on. So yeah, that concluded the week, and hindsight makes a lot of sense, and I kind of want to see, the 15th, I didn't take any trades, that was, maybe a day, okay, I can understand not taking a trade, FOMC later in the week, but yeah, you can see Monday's expansion completely warranted. We expanded to the upside after just breaking all-time highs. That makes a lot of sense. Then Tuesday, we get our indecision candle. You know, we want to come down in this propulsion block. You know, no trades. That's a good day in my opinion. Then FOMC day on the 17th. That would have been a perfect day. This would have been a $500 trade of a day. This was a very good day to trade. Very easy, not very good identification of what was going to happen. Just could not pull out of the market. And then 18th, that's where we started messing up. Why are we trying to short when we just come in this propulsion block, we get that double fair value gap on the Nasdaq on ES? We're only should be looking for longs. So 18th could have been prevented. The 19th, I believe, I don't really remember exactly what loss I took on the 19th. I believe it might have, I don't know. It might have been something in the chop. I don't know exactly, but I definitely got chopped. But yeah, what could have been the name of the game there? Just be patient. Don't let the fact that no sell side is taken let you just want to trade. Be a little more patient and see because today, like a day like that, that's hard. A day like this is not easy. But your setup is not there on the 1 minute time frame anywhere except right here where it's supposed to happen. So yeah, just be mindful of that and be patient going into the sessions. I'd rather have no trade and understand where the market went than trade and then learn the hard way. And then yeah, so then we end off the week right there. That's how we look. Bullish week is completely over, or bullish week, like weekly expansion is completed. Very, very clean and algorithmic. And I think if the 17th tone was different, we would have set the pace a lot different for the 18th and 19th. But it is all right. Moving on. So now we're going on to week 2, which is the 22nd. Right here. So now I'm only going over. I included ES at first because of I'm only including ES on this daily and on this first one because this larger time frame, SMT and such. But yeah. Okay, so let's just get into the 22nd. So the 15 minute on the 22nd, we just came off of this weekly expansion. We could see price necessarily being bullish, or we could, just see, want to just chill. We're going to have to see what it wants to do. We just took all-time highs, potential for, little manipulation day, accumulation, nothing crazy. I wouldn't expect anything wild after, FOMC week and then going into a Monday. But yeah, anyways, this right here, these quadrant levels are, I'm going to bring slide 3 way down. So these quadrant levels are this premium wick on the Nasdaq. So you can tell right here we get above it overnight. We come down into it. The London session starts accumulating. We get an order block right here with this breaker structure. Price just accumulates in there and eventually shoots up and starts to rally. This high right here was basically our buy side liquidity. And we would expect to move higher as a result of coming into this wick. Remember, wicks are gaps, and then coming into here, sweeping this larger time frame order block right here on the 15 minute, this accumulation, and then finally expanding. There's no reason to be shorting down to these lows, and I believe there was an SMT between these lows right here. I would have to double check, but I believe with more certainty than not that there's an SMT in there, so that would also help. Now going on to this 1 minute time frame. 9:30 opens up right here. We get our rally. We come all the way up, come all the way back down, sweep this low, and then start to move higher. Once we get above this high, this is now my breaker, and I'm gonna identify fib levels on there. So, this is my high, this is my low. I want to see where price wants to go as a result of this, and I'm gonna use my 0.5, 2, 1, negative 0.5. All these are negative, by the way. To see where we want to go. So then, yeah, we push up slowly higher. We eventually get a nice tap into this breaker, push up into this buy side, barely take it. I don't know why my crosshair is on this candle specifically, but we just barely take that high and we reject lower into this 1 minute breaker, larger time frame, fair value gap, I believe. Take out this low. We get our, breaker structure right here, fair value gap retrace. Double fair value gap entry right there, and then target your negative, or your negative 1.5, your negative 2, your negative 3, I believe. Yeah, or something. Yeah, negative 3. But yeah, that would have been, a very clean day. Yes, it would have been harder to analyze, and yes, it would have been high resistance to the upside. Price action looks very, strange in this situation. But what else could we really be expecting? We just want to go off what the market's going to give us. Pushing and pushing and pushing. Remember, you do not want to fight those all-time highs. Next, the 23rd. The 23rd, which is this Tuesday. If I can go, why did it get so small? If we can go back to here. So this was our wick day. We respected it, pushed up higher. Now I could see us potentially, returning back into that wick. But still, my bias is still going to be bullish because I do not want to be, predicting all-time highs to an extent. But I do want to be, necessarily cautious for that downside potential. Okay. So Tuesday. Oh no, sorry. Tuesday was this down move. Sorry, that. Because then look, we'll start here. Monday, Tuesday, Wednesday, Thursday, Friday, Monday. Okay, yeah, Monday. So Monday came into this wick. Yeah, and then expanded higher. Tuesday. Okay. So Tuesday, we got that basically reversal. We could have been expecting that. Monday we start to rally. We just finished that weekly. I would say market maker buy model basically. Maybe it's a little different, but still, that model played out, and I believe we were due for some sort of retracement. And this kind of hints at it. So we rally up all day yesterday, and we come into the next day open, which is right around here, and we consolidate. London session comes above, sweeps this buy side liquidity, leaves this high intact, which is pretty strange in my opinion. But this is what ICT was like. If we leave this high intact, as well as having this swing high, this swing high, this swing high with this lower low, that kind of creates a market maker reversal for intermediate term high. So yeah, basically we take buy side, we come in, this is an order block, we break below it, we return into it, and then we sharply reject off of 9:30 open. And then I'm immediately going to throw my fib on the high right here of this order block and then the low, just so I can get not wick but quadrant levels to see what the heck I need to be targeting, especially as the downside, because we have this liquidity, and then all this resting liquidity down here, and this daily wick. So on to the 1 minute. Price is very, very choppy. This is Tuesday, basically after our, market maker buy model, I guess, played out to the upside. And what does this kind of look like? This kind of looks like this, but just a little different, we're very high resistance, price is filling in all the inefficiencies it wants to fill in before it reaches, its final destination. So 9:30, we get a rip higher, sweep buy side, break lower, and then we get a double for rally gap right here. Taking a short on there, just a larger stop loss because this is hindsight. But I knew price wanted to expand lower, but this was a double fat entry that would have yielded a stop out. And yeah, there's really nothing I could have done to prevent that. Shorting right there, stop loss right above this high, or at that fair leg up high, you're getting stopped and then ran. So yeah, very, very complicated day in my opinion. This would have been a good loss of a day. Been bearish. Model plays out itself. There's just nothing there. It was a little tough. So yeah, we consolidate, sweep, protected high. We sweep again, get an order block, tap into it. And this is also an order block. I didn't mark it out just because I kind of forgot. I should have marked out that one over this one. But we get a return into there, and then we get another return into there, and finally break lower, right around 12. But the session is basically over at 11. So that would have been a no trading day. And it kind of makes sense, Price is very, 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 we're up here where we could expect some measure of, sell side being taken, especially because of how, bullish we have been the past days. And, once NASDAQ goes down, it's usually pretty violent. So yeah, Monday push up, Tuesday got a rally down. Both, were, you know, tougher days. You know, if you see how, you know, we come up, immediately put a relative equal high and then come lower. And now on ES, we basically have the same thing. We just rally up, relative equal high, come lower. There's really not much substance there, you know, in that daily time frame. So that's why I believe it did get that big old, you know, rally down. So now I'm going to the 24th, which is a Wednesday. What can we expect coming off of a very bearish day? You know, are we trying to still, you know, long and, you know, see, you know, if the market wants all this buy side, you know, we want to see where we open up on and, you know, where we are relative to 9:30 a.m. So let me just go to actually this real quick. Let me check where we're at. 9:30 right at this high. Okay. So we are basically our 6 p.m. So our candle opens around here. We have this very slow price action and we rally higher into, I'm going to mark out this, like into all this inefficiency basically from the previous day, all over here. So we're pushing up high resistance and eventually right here, we get a break of structure with this candle. We return into it and then we break lower. 9:30, what can I expect? You know, we're in a premium, we have these lows, we have our daily wick down there, we have more lows everywhere. You know, we want to take those lows. So now I'm gonna go to 1 minute. We get this buy side sweep 9:30 a.m. We immediately get this drop down over here. Something interesting I saw on the 1 minute time frame, just because I believe I can show you over here, right over here, I believe, yeah, 3 a.m. We get a 1 minute breaker block, 1 minute order block, sorry, to the downside. Not the downside, sorry. The upside. We get a order block to the upside, and then you can see how we break below it, respect it right here with that reject, tap back into it, tap back into it, tap back into it, tap back into it, and then break lower. And then yeah, that is kind of you know, that explanation for why price didn't want to go above this high. And then we break lower, we come close to our sell side, and by that sell side I mean right here. We get this rally higher, then we get an SMT up here, order block, and there was just no entry for me to the downside on this 1 minute time frame except for right here, and the RR was not worth it. Definitely was not worth it in this situation. But then we took sell side and then started, you know, to do whatever. But you know, some kind of common occurrence I'm seeing, you know, when price action is a little bit more I wouldn't even say algorithmic or not algorithmic. I would say a little more messy, you know, a little more high resistance, you know, because, you know, essentially we're retracing, you know, on the larger time frame, you know, it's gonna be a little more, you know, dirty. You know, 1 minute time frame, dirty. Only place you got to set up was right here. Then Tuesday, dirty. You know, in this. Sorry, I thought it was daily wick, but just very dirty. And then finally the 25th, 24th. Still dirty, but to an extent, you know, you could still possibly read it. You know, if you're on the seconds time frame, there's possibly some entries. But, you know, I'm noticing that there's really not very many entries on this second week. So, yeah. Next, the 25th. The 25th would bring us into... 26th was the last day, so then this would bring us into here. You know, we're still seeing, you know, price be bearish. Well, we would open up here, so we'd be around here. You know, we're in this daily wick. You know, prices, you know, now taking out full buy side, you know, we're going to be basically either engineering some sort of liquidity or, you know, taking some sort of larger time frame, you know, and just hanging around that wick. So now we open up on right here. So yeah, we are dumping. This is what I kind of want to get into. It's all about that narrative on that daily time frame. Because you see this wick up here, we're gravitating away from this wick. And you could say, oh my gosh, you know, we're going to go short, we're going to take out some lows and just go crazy. But it's all about where you open up. You know, right here, we open up at 9:30. We get a straight rally down. If I look at right here, yeah. We get a straight rally down, break a structure, retrace that back into here, and get our expansion up higher above these highs, relative equal highs after we tap into this breaker. So yeah, that kind of was the idea, and we're opening in a very, very deep premium discount. Sorry, Right here we have our 12 o'clock open, our 8:30 opens around here, so we're in a very deep discount, and we're gravitating away from that daily wick. I would like to see us come back into there. So now going on this 1 minute time frame, we open up, rally lower, we get this rally lower. So this is all the fake move, and eventually get this break above right here. We return back into it right here. This is our order block. Sorry, right here. We get our break above right here. We don't return into it. We return into it here though, and then as soon as we get that return into here, I would expect us to go higher. We break structure again right here, and then we don't get a double fairly up entry. This could have been, and it would have been, but it just wasn't. Didn't want to come down into there. So then once again, no setup. On the entire day. Narrative. It could have been right. Yes, deep discount. Yes, I want to buy those lows, and I want to take it higher. But that 1 minute is not providing us with any entry. And what is this now for the third day in a row? My entry has not been there on the 1 minute time frame in the morning session. That's a little messed up in my opinion. It's like, it's not nice. Like, come on now. But yeah, that kind of explains that session. We're very in a deep discount. There's no idea of shorting in here at whatsoever. So yeah, that's how that day closed off. The 26th, no trade. No, sorry, the 25th, no trade. Now we're into the 26th. Where is this at relative to our daily time frame? We are right here. So we open up and we're in this wick, in this fair value gap, in all of this, mess. We have this daily wick that we've marked out. We could see how we want to play around in there. So now on this 15-minute time frame, you can see, yes, we look, we're like chopping, we have these lows right here, which I believe are SMT lows, if I'm not mistaken. So yeah, we get this sell side sweep. Market opens. Let me check our market opens again. Yeah, market opens right here. We get that. Okay. So market opens right around here. We get this rally lower into these order blocks, sweeping sell side. And on ES, I wish I marked out ES and I could show. But ES basically took out some sort of SMT, and then we got a double for rally gap, and we took out that high. It was much more nice. I had to set up on there. Oh, I show it. Never mind, I show it. But yeah, so let me go then to here. Yeah, so ES comes down, we get the SMT, get a double for rally gap. I take this long, 10:30 news. 10 a.m. news takes us up higher, and then I am not thinking, we're bearish. On that larger time frame. Sorry, got me waking up early today. On this larger time frame, I could have seen, these lows or something around here, but remember, we want this daily imbalance or this daily wick. So then that's when, we get this rally higher, get an SMT at the highs right there. And then, hypothetically, NASDAQ should have an entry to the downside. However, we don't. We just start to rally lower, and then, we take sell side. So, the only setup was right here, and right there's our long, just barely almost came back down, and then, take that long to the upside. But yeah, that was, the only setup in here. It was much more clean than NASDAQ, yes, but why? So yeah, I want to go back to just this real quick, and kind of think about why it really happened. The previous week, not the 22nd to 26th, but the 15th to the 19th was very nice. We had our setup basically almost every other day, every day. Not the 16th, 17th obviously, 18th yes, 19th yes, and we weren't able to capitalize on it. Just because of the fact that my narrative was so messed up. Emphasizing that daily time frame is so important, and basically, are we opening in a premium, or are we where are we relative to time on the day? If NASDAQ's pushing up way higher and I'm expecting us to move lower for the day, that's like kind of like a synchronicity. It's like, okay, this makes sense with this. But say, I'm bullish on the day and NASDAQ, is sky high, I would have to, think about, what kind of, what should I see before X happens, like in this situation, like what I want to see before we go higher, we returned into this 15-minute fair value gap to go higher. What did I want to see? This was not a good day. What I want to see for FOMC, us come down into the here and then eventually move higher from that daily time frame. So yeah, basing your analysis on this daily time frame is by far one of the most important things you can do. I think I was just a little too stuck in my 15-minute time frame Asian sessions overnight, to see this larger time frame and to where we're gonna expand. But yes, I do agree that price is a little bit choppier than that first week. But that is because we're going through, a sort of, not reversal, but I could say that we put in that intermediate term high, and now we want to be, a little bit more consolidating. We're not going to be as pretty. But, what do we do as a result of this? We keep in mind that daily time frame and that larger time frame of, what do we want to get? And where are we? Where we open up? So we open up 9:30 right here. I'm bullish on the day. I like this low. I like how we swept it, and we immediately get an entry to the upside because I'm exceedingly bullish. Because I believe there's no reason to go lower back down. But then we come into this daily wick and then go lower. But regardless, if what we did after coming into this daily wick, my bias was right in the fact that we wanted to go higher into here. It was just a matter of how high. And then like something like this, rallying down into New York Open, you're going to want to expect, a bullish move higher. And then, say for example, right here, is that really what it is? Yeah. Okay. You can't see this price action because, it's like way after. But yeah, like this is just unavoidable. There's some times that you're just gonna get caught up in the price action like that, there's really nothing you can do about it, except just accept it and have good risk and not turn into a revenge trader on days like that, and that's how you live on another day. So yeah, what is my consensus? What is the answer to my why? My why, I believe, is just not understanding that daily time frame, not forgetting, that putting emphasis on it. I was just too narrowed down, opening the chart, looking at this 15-minute time frame, and then being like, like I'll go to the day that I lost. I'll go to the day that I lost. I remember it pretty explicitly. Like on the 15-minute time frame, I'm seeing us, we look good to go down, respecting this 15-minute fair value gap. I see these lows down here. These lows, we're in a premium, and we just came down off of it. We look semi good, but then if you have that daily time frame in mind, that we're done with sell side for that time being, and you can expect some sort of rally higher, and then look, we get a setup right here that takes us into that buy side. So yeah, and then like a day like this, like you don't have to find a trade in the AM session. If you are expecting it to be manipulation, accumulation, and then the move happens lunch session, because that's sometimes what happens. The market wants to chop around, screw everyone and their mom up for New York session, but then that lunch macro starts and we start spooling, and that's what happened, I believe, twice last week. So yeah, just paying attention to time, just allow yourself to understand where market's at what time, and what we're trying to do on the day. And use those fib levels for take profits. I like them a lot. That's what I kind of started experimenting with around here. Like you can see, I shorted and then targeted that daily quad daily level and that -4 expansion level. So yeah, that's kind of all I got. But I like how I went over every single basically trading day for the past 2 weeks of my semi-mediocre trading, definitely. And was able to understand, my setups, the reason why I didn't take, basically anything last week was because 3 out of the 4 days or 3 out of the 5 days were, no setups presented, And then the first one, you know, I just got chopped up. Let me actually go to the 22nd and see. Well, not the 22nd, but like I don't remember what I got caught up on. Oh, I do remember right here, right off open. Yes, it's a perfect example again. We get our 9:30 open. What is this? 858. 858. So yeah, we just come up into this. Oh yeah, right here. I remember now exactly. We come up into this 15-minute order block and we show some sort of rejection, just barely. Like this is a long thing to the downside. We just show some sort of rejection, and I like shorts. I like these relative equal lows, but what am I forgetting? That wick is a gap. That wick is a fair value gap. That wick is a fair value gap. We're going higher. There's no reason to be shorting. And yeah, you know, we just got exactly punished right here. Boom, break above, and then, you know, we start to go higher. And then that warranted me to not take a trade later on in the session as a result of being, you know, like, all right, I'm done for the day. But yeah, you know, it's just simple mistakes that, you know, that impact your narrative, and then your narrative impacts your bias, and then your bias impacts your setup, and then your setup impacts your, you know, P&L, your trading, your emotions, everything. So yeah, you know, very nice that I went over that. In my opinion, you know, I did like, you know, what I saw, and you know, what I can improve on. You know, ICD posted like literally, I believe it was like yesterday or something. You know, like today's Saturday. What have you learned this week? You know, and you know, I learned this week that, you know, my narrative and my bias, you know, I just can't stray away. You know, if I'm lost on that 15-minute time frame, and if I'm like, where's the market possibly gonna go this morning, I shouldn't be wanting to trade. You know, there was plenty of times last week where I was like, you know, I'm not confident with where price is, like especially with this, you know, I was not really confident the price was, you know, and you know, I would pay the due, you know, I'd pay the loss, and yeah, you know, that's all I really got to say. So thank you for listening. If you made it this far, I know it's a long ass video, but yeah, you know, I do like, you know, where we are in terms of next week. I like how we're gonna get, you know, some sort of either consolidation, expansion, or on the weekly we do have a double for value gap, so I'm going to pair that daily time frame with that weekly, and later I will do an analysis on my weekly objective, weekly bias, where I want to see each day go, how I want to see Monday, Tuesday, Wednesday, Thursday, Friday play, manipulation, distribution, etc. But yeah, that's all. Thank you for listening, and yeah, I'll see you later. God's good.